Now, we've just seen the world's biggest stock market debut for 2 years, and guess where the company's from? If you guessed China, you'd be right. The Postal Savings Bank of China raised $7.4 billion when it listed in Hong Kong, which was at the lower end of analysts' expectations. In fact, around the world, appetite for new shares is a little flat. But why? Pamela Ambler reports.
It may not be a household name outside of Asia, but the PSBC serves more than a third of China's population. With 40,000 branches, it's 12 times more outlets than its next biggest competitor, Bank of Communications. But despite having a presence in second, third, and even fourth-tier cities in rural areas, it still remains a savings bank in the most traditional sense, just collecting deposits, giving out loans, and only recently receiving approval to sell Tier 2 securities.
Generally, when there's old people, mobility is slow. They will give you priority access to the windows so you don't have to line up. Also, for those who can't leave the house, they will come to your door to help you if you call them.
But through this offer, the bank is aiming to transform itself from a brick-and-mortar lender into a digital player. And it has support from Alibaba's Ant Financial as well as technology giant Tencent. A further $7.5 billion will help it close the gap between its nearest rivals. More than 70% of this deal is covered by so-called cornerstone investors who've agreed to a 6-month lockup period, holding the stock in a signal of commitment. At the same time, smart money can hurt liquidity, and in this instance, retail demand was not as high as the $10 billion the company was initially hoping to raise. In another sign, the IPO market is drying up. Goldman Sachs just joined its European peers in scaling down. It slashed 30% of its investment banking jobs in Asia, citing a slowdown in activity. But there could still be a silver lining.
I think with yields actually going to be slightly on the upwards now, given that we are now seeing central banks pulling away more of the monetary easing comparing to before, we are going to see possibly equity finance to come up slightly better now comparing to just pure debt financing.
But with Hong Kong markets outperforming the region, up 6.5% so far this year, and a Shenzhen Stock Connect set to launch in November, some believe the PSBC may not have got the timing right. Pamela Ambler, TRT World, Hong Kong.